I was always fascinated with the financial markets, reading my dad's Wall Street Journal and Barron's, taking field trips to the New York Stock Exchange, checking stock quotes at lunch, asking my stockbrokers questions, who at the time I thought knew more than I did. When I started trading in the early 90s, I made numerous mistakes. It's likely that you are too, and that's costing you money. Honestly, I think everyone does, and unfortunately, it's part of the learning curve, provided you have the discipline and are willing to learn. But I learned valuable lessons and want you to hopefully avoid many of them to save you stress and money. If you are like most traders, trading options scare you because they seem too complex. Well, they are without proper education. Even the simplest things can seem overwhelming when you don't know how. But if you feel that way, don't let that stop you, because I've taught thousands of students over the past 20 years how to trade options like I do. Even though I've traded millions of shares of stock, in my view, there's no better vehicle than options to generate a consistent income in the financial markets. While I'm not the only trader you will hear from claiming they trade options for income, the difference is how I use chart patterns and volatility in making decisions. I have such a passion for trading that I gave up my lucrative law practice a long time ago. Trading options allows me to trade and generate income anywhere in the world with my simple laptop and an internet connection. In fact, I've traveled to over 60 countries and have created an awesome lifestyle trading options. Trading options provides me the flexibility that allows me to trade without needing the exactness of other methods when trading stocks alone. After you complete our option series, you will see that trading options is easier, less stressful, and provides limitless opportunities for generating wealth and ongoing income. Let's talk about the benefits of options. Just before the internet market bubble in 2000, I was introduced to options by a mentor of mine. He showed me how options were easier to trade than stocks. I was curious and amazed. You can profit in up, down, sideways markets. And I learned that you can even make money when being wrong on market direction. I know that sounds impossible, but with options it's true. In this webinar, I'm going to show you a few examples of that. They provide limited risk, calculable risk when you are buying or selling options. There's higher levels of leverage and return on investment. I'm going to show you some examples today. When you're trading stocks alone or futures or commodities or currencies, any other instruments, they are more difficult to trade because you're looking for precise strategies that line up. And if they don't, then you don't trade. Hopefully, that is. In trading options, my partner Greg Capper and I, we find strategies every single day. Now, granted, when things line up, we're pushing the throttle, and we have subscribers saying, oh my God, why are you giving us so many trades? The answer is because we find so many high probability compelling opportunities that we provide them because we know that there's different subscribers and different time frames and strategies they like more than others. You don't have to mess around with uptick rules or stocks that are non-shortable, for example. Doesn't happen in options. You capitalize on directional moves, and I'm going to show you, we teach our strategies in two main buckets, if you will. Directional bucket, where you're expecting a big move up or down, and we're going to show you strategies to profit on that with higher leverage, higher ROI, with limited and calculable risk. Superior risk profiles versus trading the stocks with less risk. The other bucket that we're going to show you today even is the income bucket. So when we're just expecting a turn in a particular pattern, we're placing a bet that it's just not going to go in one direction, and we get paid for it. As I mentioned in the other slide, you don't have to time entries with precision. I refer to stocks as single dimensional, again, or a currency or commodity or future. But if you aren't trading options, you profit by being right in the direction that you are predicting. If you're buying it and it goes up, you profit. If you short it and it goes down, you profit. If not, you have an immediate loss on your hand. With trading options, there is a cushion built in our strategies, which I'm going to show you examples of. But we don't have to time it with precision because of the strategy we are deploying. So I'd like to break down for you how we teach simple technical analysis and how we teach our two buckets depending upon what the stock is doing. We call this our stock market atom. It's the only possible directions a stock can move. The uptrend we refer to as stage 2. It has the traits of investor greed, which is what's driving it, making higher highs and higher lows. We want our bucket number 1, which is our directional plays, in stage 2, directional bullish. In the stage 4 downtrend, directional bearish. In this uptrend, they don't go just straight up. They have ebbs and flows in an uptrend. We call that the micro movements within a macro movement up in stage 2. So we're going to show you how to deploy income strategies in stage 2 also. So whereas you might be having to sit through a pullback if you are a long-term investor, our pullbacks are profitable, not only by a strategy we might overlay to your directional trade, but we're doing additional income trades on those micro pullbacks. So the bear directional, just the opposite. Stage 1 is what we refer to as a sideways trend, typically after a stage 4 downtrend, where investors and traders are feeling ambivalence. They're not excited about the stock market because, particularly if they've just sat through the stage 4. So that's going sideways, so investors have little to no opportunity there. Active traders, what we do there is we're going to deploy bucket number 2, income strategies. We're going to be selling options, puts and spreads on support, calls and spreads on resistance. But if it's genuinely a stage 1 after a 4, we would be favoring put spreads because we think the pattern is bottoming. Now, after an extended run and the stock broke its uptrend and is going sideways with relatively even highs and lows, that's when we do the opposite of 1. We short out of the money call options and call spreads, and we'll even do some put spreads if it's a strong sideways trend, but we favor the short side if we think the next macro move is to the downside. And then we repeat that over and over again. So those are our 2 buckets. So whenever every single trade we teach you starts with looking at the pattern, coming up with a bias of the pattern, and then We show you how to read volatility, of course, but then we put them into one of these two buckets. When multiple time frames are in alignment and we are predicting a big move, bucket one. When we're just wanting income, our weekly and monthly income strategies come from bucket two primarily, which is selling options to put money in our pocket and getting paid just like an insurance company. So our Master Trader Seminar Series is going to show you exactly what strategies to do in every single possible stock market move objectively without having to listen to nonsense.